Hey guys and girls, welcome back to the Everyday Money Guy. Today we're going to be talking about a pillar of the American dream, home ownership. And not just owning a home, but having one that's completely paid off, free and clear. You owe nothing to the bank. Whether that is a good idea or a bad idea, long-term financially for you. So along with just home ownership, I think that a large portion of the homeowners out there are really looking forward to having their mortgage paid off, their home is free and clear, they don't have to worry about making that payment anymore, and I think that that is a flawed logic. It feels good to not have a mortgage loan to the bank, but it isn't necessarily the best way for you to use your money, and I'm going to show you why that is. If you pay off your mortgage, you're taking cash out of the markets if you haven't invested, and you are sinking that money into your house where it will only grow at whatever the rate of real estate price increase is in your area. Not only that, it will be almost impossible to utilize that money without either selling your home or refinancing your home, which are very expensive and lengthy processes themselves. So I took a look on the line to see what the average mortgage is in the United States, and it runs about $200,000, just over like $202,000. But for easy math, because that's how I like to do things, we're going to say that the mortgage is $200,000, and we are also going to assume that that person has $200,000 in cash. Obviously, that would be a great situation for everyone to be in, but this is an example of what you can do with money that you have. And then you can use that to make your own assumptions and look at it yourself in a calculator online or whatever. The two scenarios that they can have essentially is that they can just take that $200,000 for that $200,000 house and purchase it in cash. Or they can finance that mortgage and have a $200,000 note that they have to pay. Obviously, here again, we are discounting down payments and things of that nature for the ease of doing the math. Now, assuming that these individuals take a traditional fixed rate 30-year mortgage at a rate of 3%, the entire cost of that loan, including the principal and the interest, altogether at the end is about $300,000. So, over 30 years, you are paying $100,000 to not have all the money up front and use the bank's money to finance your home. If you would have taken that $200,000 that you had to purchase this home and you would have invested it in a market fund that returns a similar return to the S&P 500, so for example, an index fund, which historically returns around 10% annually, and you invested that for the same 30 years that you had that mortgage, at the end of that time period, that $200,000 would have grown into $3.5 million, which really makes that $100,000 of interest seem like, a drop in the bucket, throwaway money. In the end, the $3.5 million minus the $300,000 that home costs altogether with principal and interest would leave you with a net $3.2 million. And so at the basic, two option scenario, you have left $3.2 million on the table for the mental peace of mind of not having a mortgage payment. But there's another scenario I want to throw at you as well, involving taking the mortgage note, investing that $200,000 into that market account that is going to return 10% annually, and it is taking your mortgage payment out of that account, because with 10% return on $200,000, you're going to get about $20,000 a year in returns. The principal and interest total for that $200,000 mortgage per month is about $843.21, or $10,118.52 per year. It's pretty easy math that the $20,000 is more than the $10,118, so the loan will essentially pay for itself over time. Now, obviously, taxes and insurance aren't included in this, but if you look at how much that you're going to have to pay in taxes and insurance, you have almost $9,000 additionally coming in from that $200,000 investment that you made that's returning 10% to pay taxes and insurance. Now, let's say that you took that option and you withdrew your payments from the market account that you have that $200,000 invested in, and you only took out the principal and interest payments, and maybe you paid your taxes and insurance out of pocket from another account. But we're just going to say that you just took the principal and interest out of there. At the end of that 30 years, you will have that home completely paid for and a balance of $1.7 million in that account. So that's after all of your payments, after all the compounding over 30 years, $1.7 million plus a paid off house. That's a pretty solid deal. Now you might say to me, I don't have a $200,000 mortgage. I have a much lower amount, so it might be worth it to me just to pay it off. Like, let's say that it's a $50,000 mortgage and you have a 10-year note at 2.25%. You're thinking, I only got $50,000 left to pay. I'm just going to pay it off. I'm mentally free of this mortgage burden. The total cost of that mortgage, that $50,000 over 10 years at 2.25%, will be $55,882 at the end of the 10 years. If they would invest that same $50,000 into a market account that returns a 10% return, such as an S&P 500 index fund, over the 10-year term, the returns would total $129,687 for a spread of approximately $74,000 versus paying the note. Another thing to keep in mind is that even if you have a paid-off house with the bank, your home is still never going to be cost-free. And the reason for that is, number one, taxes. The government will always want tax money from your property. So you will always have something to pay on that property. Because go ahead and try to stop paying anything on there and see how long you are allowed to live in there before the sheriff comes and kicks you out for tax lien foreclosure. In addition, if you keep insurance on your home, which I would highly recommend doing after you pay it off, there will always be that expense as well. So even though you may get out from underneath the bank and their mortgage, you will never, ever stop paying for your home. So I hope this gives you some perspective on what to do if you do find yourself fortunate enough to have the money to pay off your home. Guys, if you like this video, I would appreciate it if you subscribe to this channel to grow your wealth, increase your success, put you on the road to financial freedom. Give it a thumbs up to help me out in the YouTube algorithm. I appreciate you watching, and I'll catch you next time.